Hello, students. Welcome to week 3 of Accounting Principles. Hope and pray that all is going well for you during this course. Like last week, be sure to check out the devotional for this week and be sure to read the assigned reading from the course text. All right, let's take a look at week three's learning objectives. This week, we're learning how to classify long-term assets and computing depreciation of those long-term assets. Long-term assets are typically buildings, equipment, land, and that sort of thing. And you'll find those assets listed on the balance sheet. But we're also going to be learning how to account for a business's natural resources, if there are any, while also understanding how to establish the value for those natural resources. And then we're also going to take a look at intangible assets like research and goodwill and copyrights and that sort of thing. Well, let's look at the meaning of a long-term asset first of all. Typically, long-term assets have characteristics like, they'll have a useful life of more than 1 year. And as I said a moment ago, often it's property, land, plant, equipment, and that sort of thing. And these assets are not intended for resale to the customers. So these assets are not intended to be a revenue stream for the business. Although if you sell them, you certainly get revenue, but that's not what you're in business for. You're not in business to sell these long-term assets. Otherwise, you'd be in the business of, you'd use those assets as inventory and they would have different valuation requirements. So long-term assets are classified as property, plant, and equipment, natural resources, and that would be things like gas and oil and that sort of thing. And then also intangible assets, like I mentioned a minute ago, copyrights and patents, trademarks, branding, that sort of thing. So the long-term assets can impact both the balance sheet and the income statement as shown on this slide. So for example, a piece of equipment's value is held on the balance sheet, but its annual depreciation is recorded on the income statement. So the important thing to remember is that a long-term asset often impacts two key financial elements, the balance sheet and the income statement. Let's talk about depreciation for a second. Depreciation refers to the allocation of the cost of a plant asset over its estimated useful life. And I should say depreciation refers to allocation of the cost of an asset, whether it's a plant asset or not. It's a long-term asset over its estimated useful life. Um, and it's not really to the asset's physical deterioration. It's not necessarily tied to the asset's physical deterioration or its decrease in market value. Depreciation from an accounting perspective is usually disconnected, uncoupled, if you will, from the value of the asset on the market. So for example, take an old historical automobile that maybe was originally purchased for a business back in the 1950s, let's say. It was their company vehicle back in the 1950s. It would have been a long-term asset, but it no longer has any value on the company's books. It's been long depreciated ago, but it can fetch tens of thousands of dollars on the open market. So be sure to read about in the course text the various methods for calculating depreciation of long-term assets. And remember, the value of the asset on the books doesn't have to match the market value that you could fetch for it on the open market. All right, let's talk about natural resources. Natural resources are also long-term assets that are typically converted to inventory by cutting, pumping, mining, that sort of thing, or other extraction methods. You would find this type of an asset, on an oil company's balance sheet or a mining company's balance sheet or maybe a forestry company's balance sheet. As these resources are turned to inventory, the asset account is reduced and the inventory account is increased. When we talk about intangible assets, they do carry a value and they're considered long-term assets. And really these assets kind of give the right to the owner to use them, and so therefore it adds value to the company. So there are ways to estimate the value of a copyright, for example, or the value of a brand. Imagine for a minute the brand value today of a company like Nike, Apple, Coca-Cola, Amazon, Ford Motor Company, you name it. Those brands carry a lot of asset value because they bring They bring goodness to the owner, if you will. All right, that is it for now. Remember to get your discussion questions and quizzes and assignments in on time. And remember, God is on his throne. He's always been there. He's always going to be. Have a wonderful week.